The stock is up 500% in 12 months. 500%. While the mainstream financial media was telling you to buy treasury bonds, while CNBC was parading experts who said silver was dead money, while the Wall Street analysts were downgrading every mining stock they could find. One company was quietly tripling, then quadrupling, then quintupling. And nobody was talking about it. Nobody on the evening news, nobody in the financial papers, nobody in your stockbroker's office. But the institutions were buying. The smart money was accumulating. And the price action tells you everything you need to know about what is coming next. Ladies and gentlemen, Asian guy here. And today we are going to talk about America's gold and silver, ticker symbol USAS, because what is happening with this company is a microcosm of everything we have been discussing on this channel. The market is not looking at 2025. The market is looking at 2026 and beyond. And the price is telling you that something massive is about to unfold. Let me set the stage. Silver just printed its best year since records began in the 1950s. We are talking about a 174% gain. We are talking about prices that have blown through 80 and touched 82.88 on the Shanghai Futures Exchange. The CME is panicking with emergency margin hikes. The COMEX vaults are draining. The paper-to-physical ratio has never been more stretched. And in the middle of all of this chaos, in the middle of this historic squeeze, one small silver miner has outperformed everything. Not by a little, by a factor of 10. America's gold and silver is up 200% in the last 6 months. It is up over 500% in the last 12 months. That is not a typo. That is not an error. That is the market screaming at you that the fundamentals have shifted and most investors are still asleep at the wheel. Now, I want to be very clear about something before we go further. This is not a company that has figured everything out. This is not a company that is printing profits hand over fist. In fact, the most recent quarter showed a loss. The balance sheet is tight. There are risks here. Real risks, execution risks, financial risks, dilution risks. I'm going to walk you through all of them because I respect your intelligence and I believe you deserve the complete picture. But what I also want you to understand is that the market is not paying for what this company is today. The market is paying for what this company is becoming. And that distinction makes all the difference when silver is in the middle of the greatest bull run in 7 decades. Let us start with the fundamentals. In Q3 2025, America's gold and silver produced 765,000 ounces of silver. That is nearly double what they produced in the same quarter last year. The scale is growing. The operations are ramping. The Galena complex is firing. Coslaw is contributing. The company generated $30.6 million in consolidated revenue, plus another $12.9 million in pre-production sales. Year-over-year growth close to 37%. These are not the numbers of a dying company. These are the numbers of a company that is building something. The problem, and this is critical, is that the growth has not yet translated into profitability. The quarter closed with an EPS loss of $0.02, better than expected, but still a loss. For the first 9 months of the year, the company recorded a net loss of approximately $49.7 million. There is accounting noise from metal contracts. There's the reality of fixed costs that have not yet been fully absorbed. And there's the simple truth that scaling a mining operation takes time. You cannot flip a switch and suddenly become profitable. You have to build the infrastructure. You have to prove the ore body. You have to optimize the mill. And that is exactly what USAS is doing. But here is where the story gets interesting. Here is where the smart money starts paying attention. Last month, America's Gold and Silver announced the acquisition of the Crescent Silver Mine. And when I saw this deal, when I read through the details, I understood immediately why the stock has been on a tear. This is not just any acquisition. This is an operationally synergistic asset that fits perfectly into the existing infrastructure. Crescent is located only 9 miles from the Galena complex. 9 miles. That is not a rounding error. That is a strategic masterstroke. The mineralization at Crescent is nearly identical to what they are already processing at Galena. High-grade silver with byproduct credits from copper and antimony. The management team said it themselves on the M&A call. And I quote, "We will not find more accretive opportunities to fill our mill with stuff that is the exact same ore." End quote. Do you understand what this means? They are not building a new processing facility. They are not starting from scratch. They are simply adding high-grade feed to an existing mill that has excess capacity. The infrastructure is already there. The permits are already in place. Crescent is a past-producing mine. The metallurgy is proven. The risk profile is dramatically lower than a greenfield development. This is exactly the kind of acquisition that creates value in a bull market. When silver was at $15 an ounce, nobody cared about junior miners. Nobody wanted to fund development. Nobody wanted to take the risk. But now, with silver above $80, every ounce in the ground is worth multiples of what it was worth 2 years ago. And a company that can bring those ounces to market quickly through existing infrastructure with minimal additional capital expenditure, that company becomes incredibly valuable. The market understands this. That is why the stock is up 500%. Now let us talk about valuation, because this is where things get complicated. This is where I need you to put on your critical thinking cap. America's gold and silver is trading at demanding multiples. The price to sales ratio forward is around 15 times. The sector typically trades at 1.5 times. That is a tenfold premium. The price to book ratio exceeds 30 times. The sector averages around 2 times. That is a 15-fold premium. These are not value investor multiples. These are growth investor multiples. These are momentum trader multiples. What you are paying for at these levels is not what the company earns today. You're paying for what the market believes the company will earn tomorrow. You're paying for the Crescent acquisition to work. You're paying for throughput to increase. You're paying for margins to improve. You are paying for the silver bull market to continue. If all of those things happen, the stock could still have significant upside. If any of them fail to materialize, the downside risk is substantial. Let me give you the other side of the ledger. The margins are still weak. The EBIT margin was approximately negative 32%. The EBITDA margin was close to negative 14%. Return on equity is negative. Return on assets is negative. Operating cash flow is negative. Free cash flow is negative. The balance sheet shows $39.1 million in cash, but also a working capital deficit. Management has acknowledged that they may need additional funding to execute their investment plan. Additional funding in a bull market typically means equity raises. Equity raises mean dilution. Dilution means existing shareholders get a smaller piece of a potentially larger pie. This is the trade-off. This is the risk that comes with investing in a company that is still in transition. But here's why I keep coming back to this stock. Here's why the price action fascinates me. The market is not stupid. The market is a discounting mechanism. It looks forward, not backward. And what the market sees right now is a perfect storm of factors converging on the silver sector. Historic prices, industrial demand that is growing exponentially, solar panels, electric vehicles, electronics, medical devices, a supply deficit that has persisted since 2020, underinvestment in new mining projects for over a decade, China restricting exports, the CME panicking with margin hikes, central banks buying precious metals at a record pace, the dollar losing credibility as the world de-dollarizes. In this environment, a silver miner that is actively scaling production, that just acquired a synergistic asset, that has existing infrastructure to process, or that miner becomes a levered bet on the continuation of the trend. And the market loves levered bets in bull markets. The 500% gain in 12 months is not irrational exuberance. It is rational anticipation. The institutions are not buying USS because they think silver is going back to $15. They are buying because they think silver is going to $100 or higher. And at $100 silver, a company that is currently losing money at $80 silver starts making a lot of money. The operating leverage in these businesses is extreme. A 25% increase in the silver price could mean a 200% increase in profitability for a marginal producer. That is the math. That is why the junior miners move so violently when the underlying commodity moves. You're not buying a stable cash flowing business. You're buying a call option on the future price of silver. And right now, that call option is very much in the money. What should you do with this information? That is not a question I can answer for you. Every investor has a different risk tolerance. Every investor has a different time horizon. Every investor has a different portfolio composition. What I can tell you is how I think about it. The story is real. The transition is happening. The acquisition makes sense. The macro backdrop is the most supportive it has been in decades, but the valuation is demanding. The profitability is not proven. The execution risks are real. This is not a set it and forget it investment. This is a position that requires active monitoring. If Crescent ramps smoothly, if throughput increases, if margins improve, if silver continues higher, this stock could double again from here. But if any of those dominoes fails to fall, if there is an operational setback, if silver corrects, if they need to raise capital at the wrong time, the downside could be severe. The market is looking at 2026, not 2025. That is the key insight. That is why the stock is up 500% despite losing money. The buyers are not focused on last quarter. They are focused on next year. They are betting that by the time the Crescent acquisition is fully integrated, by the time the mills are running at capacity, by the time the silver price has stabilized at a new plateau, the earnings will justify the valuation. Whether that bet pays off depends on execution, depends on commodity prices, depends on 100 variables that no one can predict with certainty. But I will tell you this. In every bull market, there are companies that transform. There are miners that go from marginal to profitable. There are stocks that go from penny stocks to mid caps. The question is always whether you can identify them before the transformation is complete. America's Gold and Silver might be one of those companies. The price action suggests the smart money thinks so. The acquisition of Crescent suggests management is positioning for scale. The macro environment suggests the tailwinds will persist. The 500% gain is not the end of the story. It might be the beginning, but only if the execution matches the ambition, only if the ore grade holds, only if the margins improve, only if the silver squeeze continues. Those are the dominoes, and right now they are starting to fall. I am Asian Guy, and in the silver bull market, the companies that are scaling are the companies that are winning. Remember to like, subscribe, and share the video. See you on the other side.